move on to our next segment. So this is where I hand over to you. So this is going to be let's talk about the market. What's happening in the market? I'm gonna. Where have you got your thing?
Yeah.
Tell us what's going on in the market.
I think Jill summarized it pretty well. It's listings are drying up, everyone's struggling, and I think the numbers really show that across the country on the month. They're changing dwelling values. In Sydney and Melbourne, it actually dropped by 0.1%. Brisbane only gained 1.6%. Adelaide and Perth were both 1.9. So still growing a little bit in, I guess, our local market, but overall in across the nation, it's slowing down. I mean, that takes us annually across each different spot. Sydney at 5.8, Melbourne at 4.8. So again, very slow climbing there. Brisbane 14.5, Adelaide 8.8, and Perth 15.9. So those three, as everyone knows, has still been climbing, is still going, but it looks like it's slowing down.
So it was December, so we've got to take that into consideration as well. And I'm talking Eastern States because obviously Perth had 15% growth, 16% growth last year, which is it's insane.
Second since 2021.
Yeah. So that's incredible. Although we didn't see those massive gains like New Zealand had 39, Melbourne and Sydney had years of 35, 40, 45, which is a good thing. But yeah, let's see what else Mr. Lawless has to tell us.
I think that this summarizes it perfectly. 2025 delivers strong housing gains, but 2026 set for a softer landing. CoreLogic's National Home Value Index recorded the smallest gain in 5 months, with values rising only 0.7% in December, with Sydney and Melbourne with the biggest drag. As we said, we're actually sliding by that 0.1%. The subtle decline in values across Australia's largest two cities marks the first month-on-month decline since January last year. Of course, that's when the rate cuts commenced in February to kick that up, but is that going to happen? To be seen. Every other capital and broad rest of state region recorded a rise in values through December, although most saw the momentum leave the market. Mr. Lawless says this softening hints at a weaker start to the housing trend in 2026 because renewed speculation that the rate cutting cycle is over and the next move from the RBA could be a hike has dented housing confidence. A higher for longer setting of interest rates alongside a resurgence in cost of living pressures and worsening affordability pressures looks to have taken the heat out of the market. Despite the softer December outcome, home value surged 8.6% higher in 2025 overall, adding $71,400 to the approximate national median dwelling. This marks the strongest calendar year since 2021, when those markets rose a stunning 24.5%. But that was due to, of course, low interest rates and record high levels of purchasing activity. So completely different for what we're seeing now. Every capital city and rest of state region recorded an increase in dwelling values over the year, with Darwin at the top at 18.9% and Melbourne with only 4.8%. So it's the upper quartile of the market which continues to weigh down the growth. At a national level, those dwelling values were only up 0.2% in December, while across the lower quartile making 1.1% higher. This trend where upper quartile values have recorded a lower growth rate has played out across every capital city through the year as affordability and serviceability pressures deflect the demand towards the lower price points. So yeah, it's showing those trends. Regional markets, however, have been more resilient. Not completely immune though. The monthly pace of growth across the combined regional markets of Australia has slowed to 1.2% in November to just 1% flat in December. Despite the easing, the monthly pace of gains was double the combined capital cities' growth trends, where values rose by only 0.5% in December overall. Over the calendar year, regional dwellings rose by 9.7%, outpacing the 8.2% in the combined capital cities, whereas across the rest of state regions, West Australia took out number one with 16.1% annual increase, followed by regional Queensland of 12.6. Regional Vic recorded the lowest growth, with only values going up 6%. So to summarize, looking ahead to 2026, the housing outlook is less optimistic than 2025.
Hmm.
Uncertainty around inflation and interest rate settings is likely to weigh on housing confidence, along with ongoing affordability challenges and renewed focus on household debt and credit policy. However, we aren't likely to see a material supply response in 2026 either,
Mm,
which should help to offset any downside risk to home values trending substantially lower.
interesting, hey?
Yeah.
So again, we've got a two-speed market. Especially, I mean, we really got to take a little bit of a pinch of salt, being that these reports were December, but obviously what Matt just mentioned there was most of 2025 reporting. So the sort of slowdown in December is understandable because sales, I think only a quarter of sales take place over the last 2 weeks of December as opposed to the whole month or an average month. So that's interesting. But yeah, we've got those headwinds, high, obviously, cost of living. We've got, sort of, obviously talk of interest rates going up. Um, Affordability is probably the biggest thing. There's got to be strain nationwide there. But there is still massive shortage of stock. So interesting. We're gonna bounce back to you guys in a second. But I wanna just talk about the property management or renters because I know we've got a lot of people looking at that. So renters saw some welcome relief in December with the rental vacancy rate rising from 1.5 to 1.6 marginal through the month. However, the vacancy rate is still close to record lows, and the subtle rise could have more to do with seasonal factors through December than an actual loosening in rental conditions. The higher vacancy rate was accompanied by an easing in pace of rental growth. Cotality, who's is where we get our stats from, national rental index was up 0.3% in December, slowing from 0.5 in November. In seasonally adjusted terms, the slowdown wasn't as sharp, but still evident, slowing from zero point 0.5 to zero point 0.4. Rental conditions tend to be highly seasonal through December and January. Of course, a lot of changes happening for property management and rental properties in December, January, probably the busiest months of the year, without a doubt. So rental conditions tend to be higher then, with leasing cycles disrupted by university breaks and festivities as well. Rents are likely to rise further in 2026. That's interesting. And I think as people move out of the ownership market, which should be a trend in 2026, you will see more competition in the rental side. That is likely, not confirmed, but that is likely. National rents were up 5.2 in 2025, a step up from 4.8 in 2024. Whammy of small households to catch up in overseas migration amplified rental demand. In 5 years leading into 2020, the average rate of rental appreciation was 1.2%. The past 5 years have seen rents rise at an average annual rate of 7.4. Rents rose across every major region in 2025. Although rents are rising, home values are rising faster, driving the trend towards lower gross rental yields. Dum, 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 dum. So yeah, those headwinds we spoke about. Inflation risks are back on the radar. Uh, Cash rate. We'll talk to um, our cornerstone people in a second with regards to where that's likely to go. Um, but that being said, persistent low levels of stock still remain the same. Should act as a buffer against price falls. Overall, the outlook points towards modest but uneven growth in home values in 2026. Hmm. So very, very interesting.